Hey there, Prof. Aram here, and in this video, I'm going to go over the concept of capital budgeting, what it is, and why a successful and effective capital budgeting practice is crucial for the success of the firm. So let's get to it. If you recall, in the first few videos of the overview of corporate finance, we talked about the three main decisions that a financial manager has to make. The first one was what type of fixed assets or long-term assets or property, plant, and equipment the company should invest in. We call this capital budgeting. And then how to pay for those long-term assets, capital structure, and then how to manage the firm on a daily basis. So in this video and the next few videos, we're going to look at the first question, the capital budgeting techniques. How do we go about and make decisions on what projects to invest in? So what is capital budgeting? Capital budgeting is the process of budgeting or allocating capital for investments in fixed assets. Capital budgeting is more than just deciding whether to invest in an asset or not. Decisions like this will determine the nature of business for years to come, and mostly because fixed assets are long-lived and not easily reversible once they are made. And usually they require a significant investment of capital. So when you think about firm as a whole, a firm is nothing but a portfolio of projects or assets which have been purchased over years. So capital budgeting is probably one of the most important issues in corporate finance, even though capital structure and working capital management are also important, but it is the fixed assets of the firm that defines the business of the firm. For example, airlines are airlines because they operate airplanes, regardless of how they finance those airplanes or how they manage their day-to-day operations. An example of a capital budgeting decision is Tesla building a factory in China. Of course, this is a multinational corporation and they wanted to decide whether to build their operations outside the US. There are many different considerations here. For example, they decided to build a factory in China for different reasons. First of all, we all know that the cost of production in China is less than the US. And secondly, the market in China is a huge market and there's a lot of demand for electric vehicles in China. So these capital budgeting decisions can determine the firm's strategic direction for the foreseeable future. So that's why when you look at the capital budgeting decision, you have to consider all of these factors. You're going to look at several different projects and you have to acknowledge that the decision you're making is a long-term decision and it requires large expenditures, and usually it's difficult or impossible to reverse, and it will have an impact on your long-term strategic direction. So why do we do this? Why are we engaging in doing this capital budgeting technique? That goes back to the goal of the firm. The goal of the firm is to create and maximize value for the shareholders of the firm. So the essence of the capital budgeting is to identify the best possible projects that create the most value for shareholders. So firms usually have a huge number of possible investments, and each is an option available to the firm, but not all of these options are going to be valuable for the firm. Okay, so we need to find a framework that uses different capital budgeting techniques that basically weed out the bad projects and we can invest in the ones that create the most value. And the important thing is if we had unlimited amount of capital, we could invest in all of those projects. But in reality, firms usually have limited capital, and then we have to allocate that capital efficiently to projects that make the most value for the shareholders of the firm. So in the future videos, we're going to look at different capital budgeting techniques such as net present value, internal rate of return, payback period, discounted payback period, profitability index, and so on. But in doing so, in each of those techniques, we need to answer these four questions. Does this decision rule or capital budgeting technique consider all the cash flows of the project? Does it adjust for time value of money? Does it adjust for risk? And does it provide information on whether or not we are creating value for the firm? We need to see a positive answer to all of these questions. So in the future videos, I'm going to go over different capital budgeting techniques and give you the advantages and disadvantages of each. I hope you find this video useful, and thanks for watching.